Ethereum has been underperforming the crypto market for quite a while, especially Bitcoin. Now the question is this justified? Let's have a look at some on-chain data most people aren't considering. Let's see how much of Ethereum is held by long-term investors. Let's see how this compares with the growth of long-term investors of Bitcoin. Let's of course also look at network usage, at fee generation, at tokenomics and inflation rates. And let's not forget data around the Ethereum ETF. And all of that can't be discussed in isolation. Let's also check the layer 2s. Now, Ethereum is a different beast because it's not really a clear value proposition. With Bitcoin, we simply have the hardest of the monies, right? We've got decentralized storage of value. With Ethereum, we've got our smart contract platform, which unfortunately though is rather slow and rather expensive. And so ETH tries to reinvent itself, right? It tries to move away from just being a smart contract execution platform to also having those layer 2s that are cheaper and to also becoming potentially another store of value, being ultra sound money with even better tokenomics compared to Bitcoin. Now let's see how this all holds up. Now on this channel, we don't just do short-term speculation, we are also interested in the long term. And I believe a good proxy for long-term investments into Ethereum is to simply see at how much of Ethereum is staked. We see here color-coded different platforms for staking, the largest one being Lido. And we can also simplify this chart. We are currently at 34 million ETH being staked. Now this looks all nice and rosy, right? We see more and more Ethereum is being held for the long term and this should support the price. Now at the same time though, the Ethereum supply tends to increase in the recent past. So how does the staking compare to the supply? Because again, this is just the number of ETH. This is not relative to supply. So check this out. This is the percent of ETH staked. And this is also increasing quite nicely. So at the beginning of the year, we were at roughly 24% of Ethereum being staked. Now that's above 28%. So we are growing by roughly 0.5 percentage points per month or 6 percentage points per year. Now, of course, this cannot last forever, but this is faster than what we see with Bitcoin. Of course, with Bitcoin, we can't natively stake, but we can also look at the long-term holders, the people that simply just allocate and forget. Or in other words, the Bitcoin that haven't moved for a while. And we need to make a cutoff here, right? At what point in time do we regard somebody being a long-term holder versus a short-term speculator? When we include the wallets that have also transferred their Bitcoin within the last 3 years, we do see a bit of fluctuation here, right? We do see how some people sell off during a bull run. When we exclude those people and we just look at the Bitcoin that haven't moved for at least 5 years, this tends to grow quite constantly. Now let's take the recent past. Let's go here from 20% to our current 30%. Those 10 percentage points increased over the course of roughly 6 years. So that's 1.66 percentage points of long-term holder growth per year. Again, that number compares to roughly 6 percentage points for Ethereum per year. So it appears as if the number of people that want to hold the asset long term tends to be growing faster for Ethereum than for Bitcoin, just looking at those two metrics. Now there's a problem with Ethereum though. It's not just a store of value, right? It's also a smart contract execution platform. And the growth does not necessarily happen on that front because it's not the most efficient of the platforms. And so the big question is, can the potentially faster growth of long-term holders in Ethereum make up for that lag in growth in usage? Let's have a look at the numbers. This is the numbers of Ethereum transactions over time. And this tended to grow up until the beginning of 2018. So that was when Bitcoin was around 20K, then came the bear market. Subsequently, we recovered and now we are at a pretty stable level. A level of roughly 1 million transactions per day. So this is a weekly chart. Here we see the more recent action on a daily chart. Again, roughly 1 million transactions per day. And have a look at how this compares to the number of transactions on Solana. Solana has way more transactions. They are way more cheap. We are looking at 70 to 80 transactions in the peaks, but only at 20 to 10 million transactions at the bottoms. So there's way more volatility in Solana usage. Ethereum usage is much more predictable. We can also have a look at this in the number of active addresses. Very, very similar. A peak in 2018, and since then we crashed and recovered and are at similar levels. We've got roughly 7 million active addresses per month on Ethereum right now. Now, if that number was to suddenly sharply drop, then this does of course have a big impact on the price. If it stays at the current level and there's no real surprises, then maybe potentially the positive tokenomics and the adoption of long-term holders can support the price. At least that's what I think is a somewhat reasonable thesis. But let's continue with some more data. Here are the videos that work on YouTube. XRP will be $12,000 guaranteed, or an AI explosion, top 3 cryptos to buy in November. A lot of pushing of greed, that's what gets the clicks. What doesn't get the click is a tutorial on how to make backtests, on how to build those sheets that in the end figure out what historically worked well in the past. The backtest that I often show here on this channel. I still very much enjoy producing this kind of content though. I also share these kinds of sheets, but I don't do it on YouTube. You also get direct access to me. Feel free to check it out. It's thebitcoinstrategy.com. It appears as if the number of transactions is pretty constant. However, there had been improvements made to the scalability of Ethereum. And because of that, the Ethereum gas fees, even though the number of transactions are at similar levels, they crashed quite a lot. So there's 2 different colors here because this was the proof of work legacy gas fees. Now we've got a different fee structure that makes Ethereum quote unquote more efficient, but of course it's still years behind Solana. And currently in the last weeks, the collected gas fees were really not that large, only around 10 million. But in the peaks, we are looking at more than 10x of that amount. And so the reduced gas fees have a direct impact on tokenomics as well, because usage of Ethereum burns Ethereum and shrinks the Ethereum supply. So there are 2 forces over here. Ethereum gets minted due to staking, but Ethereum also gets burned due to usage. Now, if usage isn't high enough, then the supply increases because of the staking again. And so that's then what we see over time. This is the Ethereum supply since merge. And initially, Ethereum had been used enough for the total supply of Ethereum to drop. But since April of this year, Ethereum isn't used that actively anymore. And so the staking rewards outpace the burning. Now, just purely looking at tokenomics, the switch to proof of stake was still beneficial, because when we look at a simulation of how much supply there would have been if we just stayed at proof of work, we can see a vast improvement, right? We want to have less supply for the price to go up. But what are we currently looking at? At what kind of inflation rates? Let's annualize them and let's look at this over time. This is since September of 2022. We are currently looking at 0.68% annualized in terms of inflation for Ethereum. So every year at the current rates, 0.68% of new ETH hits the market. That is still better than Bitcoin, even after the recent halving. Bitcoin's inflation is currently at 0.85%. So we've got less inflation with Ethereum, we've got faster adoption by long-term holders, and we do not see a lot of growth of the usage. Now here is what might be depressing the Ethereum price, because we have to look at this objectively. Not everything is rosy. People sell Ethereum and there are reasons for this. Let's have a look at them. The first reason is probably the failure of the Ethereum ETF. People were hoping that the Ethereum ETF would bring in loads of money from traditional finance, but that's actually not true. We have seen quite a lot of Grayscale Bitcoin Trust outflows that somewhat equaled the inflows of those new ETFs. Now both flows are pretty much close to zero. We've got some days where there's really nothing happening. The Ethereum ETF is pretty much dead. Nobody wants to buy Ethereum via ETF. Everybody that touches the ETFs only buys Bitcoin. Here's a second reason why people turn away from Ethereum potentially. The layer 2s have less and less activity. So what we're seeing over here is the number of users that bridged to various layer 2s. So Polygon, Optimism, Arbitrum, Base, etc. We're adding this all up. We're looking at the number of users per day. This peaked at 360,000 in March of last year, then had a second wave that peaked in September of last year. And since then, there isn't that much capital that's flowing into the layer 2s anymore. And that then also has an impact on the revenue that's generated through those layer 2s. There was a very nice peak in March of 2024. This is when the meme coin trading frenzy peaked. This is also, by the way, when there was no more new stable coins flowing into the system. But more on the stablecoin market in a different video. if you're interested in that, feel free to subscribe. I publish videos like this regularly. Let's not focus on stablecoins here. Let's simply just look at the waves. We see a pretty permanent decline of layer 2 usage as well. And so what we've got over here is the Ethereum price relative to the Bitcoin price. And what's marked with this arrow is the merge. So the move from proof of work to proof of stake, which actually should have been pretty good for tokenomics of Ethereum. But unfortunately, since the merge, Ethereum underperformed Bitcoin by roughly 50%. Another interesting chart is to look at Ethereum's market cap relative to the entire market cap of crypto. That's also called the Ethereum dominance. It's currently at roughly 15% and it peaked out at around 22%. And again, there seems to be somewhat of a range and we might be very low on that range. Again, people are not happy about the ETF and about the usage of layer 2s. And so that's then the big question, right? Can we at least bounce? Can Ethereum at least somewhat keep pace with Bitcoin? If we were to rise to prior heights in Ethereum dominance, we'd see outperformance of 40%. And so you might be wondering, what do I personally do? I'm actually betting on that bounce. I like the long-term adoption. I like that we see more and more staking going on. And I like that the usage is pretty predictable, pretty stable, not going down. Of course, having some demand by the ETF wouldn't hurt, but it's not that major of a driver. The annualized Bitcoin ETF demand is at around 0.6%. And again, that growth here is 6 percentage points per year. And so I personally believe that Ethereum is oversold. I am somewhat bearish though on all of crypto. In other words, I do believe that US dollar valuations across crypto can come down because there isn't a lot of money flowing in. But I do think that Ethereum has a real chance in the next months to potentially outperform Bitcoin. I'm personally betting my money on this. I bought quite a lot of Ethereum roughly 2 weeks ago. But again, I try to be as objective as possible on this channel. And so I try to show the positives, but also the negatives. If you appreciate this, feel free to give it a like. Feel free to also subscribe in case you haven't yet. In case you've got Telegram, then you're more than welcome to join us. The link is down below. Looking very much forward to chatting with you. Cheers.